What happens when the world's largest economy puts Bitcoin on its balance sheet? Welcome to Acasoft, your AI-powered source for clear, data-driven insights. Today, we're unpacking one of 2025 oil's biggest economic headlines, the United States' decision to create a strategic Bitcoin reserve, and what it means for markets, monetary policy, and your portfolio. Round 1, the executive order. In March 2025, President Donald Trump signed an executive order directing the Treasury to begin accumulating Bitcoin as a national reserve asset. The stated goals: diversify beyond traditional gold and foreign currency reserves, anchor U.S. leadership in the digital asset space, provide a hedge against inflationary shocks. The initial tranche, reportedly 150,000 BTC, was sourced through over-the-counter deals to minimize market impact. Overnight, Bitcoin became part of official U.S. reserve strategy. 2. Immediate market reaction price action. Bitcoin, which had already crossed the $100 K mark in January, spiked to $118 K within 48 hours of the announcement before settling near $104 K. Volatility. Option implied volatility rose 20% on the day. Volatility is the price of new information. Liquidity shift. OTC desks reported record institutional flows as funds front-ran expected treasury purchases. 3. ETF outflows, a cautionary counter signal. Contrast the bullish narrative with February's record $938 single-day outflow from USS spot Bitcoin ETFs. What gives? Profit-taking. Early ETF investors locked in gains after the parabolic Q1 rally. Reallocation to sovereign demand. Some managers rotated exposure, betting that direct sovereign accumulation would outperform ETF holdings. Macro anxiety. Sticky inflation and higher for longer rates keep risk premiums elevated. Crypto is still a high beta asset. 4. Macro and policy implications. Monetary policy. Holding Bitcoin alongside treasuries and gold broadens the Fed's hedging toolkit but complicates reserve management models. Bitcoin's 24/7 trading and fixed supply contrast sharply with dollar liquidity operations. Geopolitics. Countries like El Salvador and, rumor has it, several Gulf states are exploring parallel reserves. A digital gold rush could accelerate de-dollarization debates. Regulation. Expect sharper KYC AML rules for large OTC transfers, stablecoin frameworks that reference sovereign Bitcoin holdings, and tax regimes aligned with capital markets treatment of digital assets. 5. Where could Bitcoin go? Analyst targets for year-end range from $150 K to $200 K. Key drivers: size and pace of additional government purchases, ETF inflows versus direct custody demand from institutions. Macro surprises, recession fears can cut both ways for risk assets. Remember, upside potential comes with drawdown risk. Bitcoin's worst weekly drop this cycle was 22%. Position sizing and disciplined risk management are non-negotiable. 6. Takeaways for investors and builders. Policy risk is now policy opportunity. Government action can catalyze price and adoption, but also introduce new regulatory hurdles. Diversification matters. Bitcoin's correlation with equities remains variable. Rebalancing and hedging strategies are essential. Infrastructure is maturing. Custody, on-chain analytics, and compliance tooling are scaling fast, lowering barriers for institutional entry. The strategic Bitcoin reserve marks a turning point. Crypto has moved from the fringe of finance to the core of national economic strategy. Whether you're a trader, developer, or policy watcher, the next 12 months will redefine how digital assets integrate with the real economy. If you found this breakdown valuable, like the video, subscribe to Acasoft, and share your thoughts. Is the US move visionary leadership or a risky bet? Let's discuss. This presentation was generated with AI by Acasoft, bringing you the future one insight at a time.